What are some potentially high growth, high return stocks that could provide us a ton of gains over the next few years? That is exactly what this monthly video series is about. And in today's video, we're going to be discussing an exciting high growth company that I personally am extremely interested in buying. Now, the requirement for a stock to be included in this monthly series is for it to have at least a 20% growth in its revenue year over year. And the stock we're going to be discussing today surpasses that requirement without any issues. So it's going to be a fun video. I hope you guys enjoy it. And guys, like I said, this is one that I'm personally very interested in buying. Now guys, how often do you wake up in the morning and you find yourself kind of scattering through different websites to figure out what relevant business news happened in the last day or so? This is usually what I would do and what my mornings looked like before I came across Morning Brew, which is today's video sponsor. Now, Morning Brew is a completely free service, guys, and they provide you a newsletter from Monday to Saturday in your inbox waiting for you in the morning so you can read through news in a tabulated, well thought out form while sipping your coffee. This not only saves you time because it's all organized and presented in one single email, but it also keeps you well informed and educated with what's going on in the world around you so you can become a better investor. Over the last week, I found out that SpaceX is in talks to raise up to $1 billion at a $44 billion valuation, and how Twitter's average daily user growth increased to a record 34% last quarter, but at the same time, advertising revenue dried up and fell around 20%. Now guys, I will leave a link in the description down below. It's going to be the first link down there. It's going to take you like 15 seconds to sign up, and I do highly recommend you check it out because like I said, it's free and it's going to make you a much more informed investor. But anyways, getting into our stock today, it's going to be an extremely exciting business. You can tell how excited I am just from even hinting at this company. So without further ado, let's get into it. So the company is called PagerDuty and the ticker symbol is PD. And I've been getting a ton of requests from my VIP members around this company, so I figured I'd look into this business, and it got me very, very excited. This is a company that has huge market opportunity, uses a subscription model, so it's very lucrative, and has potential for high profits over the long term. And of course, guys, it's a high growth company, which is why it's included in this video. So PagerDuty, if you're not familiar with the business itself, it's a tech company, and they claim to be the central nervous system for your digital ecosystem. What it does is it sits at the heart of your technology ecosystem and analyzes digital signals from virtually any software-enabled system. Then their software can help intelligently pinpoint issues like outages, as well as capitalize on opportunities, empowering teams to take the right real-time action. This helps businesses to be proactive and have quick turnaround times to reduce expenses, because things like outages can cost a business a lot of money, and every second that they can remain online is a second more of potential revenue. So why do their over 13,000 customers continue using them? Well, ease of use is a big one, and this is a key selling point when their whole mission is to make their customers' life more efficient. The platform is scalable, which is another big one. It grows with you and it's extremely reliable, adding to the peace of mind when using their product. It helps resolve issues as soon as possible, like we discussed. So it uses intelligence and automation to find and resolve issues quicker than other solutions out there. And finally, they are constantly improving their platform, and they use machine data and human data to deliver insights to improve your performance with each incident. What this pretty much means is that the software gets smarter over time. Now, because of the global issue, the company did have some specific slides to share, which I want to touch upon here. They list out headwinds and tailwinds here, and some of the tailwinds are going to be huge growth drivers for the business in coming years. The headwinds right now is something that I see as a very short-term issue, and it's due to the uncertainty in the economy right now. But as more businesses come online, as we resume more normalcy here, this headwind starts to disappear and it'll be full steam ahead for PagerDuty. Now, one fair question which I asked myself, and you may be asking right now, is how much money can this company really save a business? This is just a few $100s, maybe a few $1,000s. Is it really worth it for a business to subscribe to PagerDuty service? I guess this is a question that they get a lot, so they have a slide on it here, and they show an example customer, and they do show the before and after of this customer using PagerDuty. Now, I will caveat this by saying that I do believe this is probably an extreme example, but nonetheless, it is an example that they show. show. The results, guys, are staggering though, and really speaks for themselves, and I think that any customer on the fence will be convinced after seeing how much of an improvement their software has provided for this business, and how it has not only saved them a lot of money, but indirectly made them more efficient and made them more money as well. This helps companies to reduce time on troubleshooting and issues and focus more of their time on actual business activities, thus improving efficiency, and as a result, this contributes to improving growth and profits. So I personally really like that this business is in the tech space and it's focusing on a niche here that I think is going to be massive over the next few years. As more and more businesses have their data online, a need for a business like PagerDuty becomes a lot more critical, and as companies see the value in this, they'll be more than happy to pay for their service. But now comes the fun part. We need to look at the financial side of the business to figure out if this is really an investment that makes sense here. Can this company really sustain itself? Does this company really have a good balance sheet? We're going to answer all those questions right now. Here's a highlight slide going over the key metrics of the business, and they have around $175 million in the last 12 months of revenue, and they are a very high growth company at over 37% year over year. They have over 13,000 customers, and they are a subscription company, making their revenue very predictable and consistent, and they have very high gross margins as well. These are all signs of a company, especially a software tech company, that I personally look for, which gets me very excited. They also state that the total addressable market is around $25 billion, and they haven't even scratched the surface here with this, but they do continue growing and they do continue to land larger customers. If they continue at this rate, they will have a good hold and a good opportunity to capture most of that $25 billion market. This graph here shows us their revenue growth quarter over quarter, and we can see a consistent increase with some acceleration in the most recent quarter. Again, guys, the key here is a subscription model with over 95% renewal rate, which tells me that their customers are extremely happy with the service and continue to pay for it, so they are seeing value and potentially cost savings in other parts of the business because of PagerDuty. They also show us how they're growing their customers quarter over quarter, and this is consistent as well. But the one thing that stood out to me was that they have only 57 customers out of these 13,000 customers that bring in over $500,000 in revenue yearly. This means, guys, a lot of their customers are small businesses with small amounts of revenue each. So I think PagerDuty really needs to focus on the larger businesses here and land a few more of these larger deals. The banking industry may be a good one for them to try to get into. There's a lot of wasted data and information there, which could help save banks a lot of money. And in my opinion, this could be a huge potential opportunity for PagerDuty. Now, it's not all sunshine and lollipops and rainbows here with this company. There is still a downside here to this business today. They provide us guidance for fiscal year 2021, and they predict revenue to be around $204 to $213 million, which again signals good growth. But the losses seem to be building up here to 25 cents to 30 cents per share expected this year. Yes, this means that PagerDuty is not a profitable business today, and this is one of the biggest issues I can see from it from an investment perspective. But let's look closely at their balance sheet here to see how things are actually sitting today. The company sits with around $350 million in cash and $407 million in current assets, and they don't have much in long-term assets, and the total assets here sits at around $466 million. On the liabilities front, things don't look too bad if I'm being honest, and they have around $132 million in current liabilities, which is essentially covered by their cash, and their total liabilities isn't a lot more than this, sitting at around $158 million. This puts them in a very strong position, almost 3 times more assets than liabilities, which is an excellent balance sheet in my books. The downside though is that because they're losing so much money, which is around $60 million per year, it will continue to worsen this balance sheet unless they can become profitable over the next few years. There is a path to profitability as they scale within the next 3 years or so, but even if worst comes to worst here, they keep burning $60 million a year, they can still last over 5 years at this rate with their current assets. So the concern really of insolvency in the short term is fairly low. And hey, if they can hit that analyst projection of around 20% plus growth over the next couple of years, that's going to help them get that much closer to profitability because they have incredibly high gross margins and over time with scale can become very profitable. So guys, let me know in the comment section down below whether PagerDuty is now on your watch list. Are you already a shareholder of this stock? I love to hear your thoughts in the comment section down below. But again guys, remember, if you want to check out today's video sponsor, link is in the description down below. Morning Brew is completely free and it's a service that I personally use, which is why I wanted to share it with you guys here today. But either way guys, I hope you enjoyed this video. Remember to smash that like button down below to support the algorithm and support the channel here. But either way, thank you so much for watching and don't forget to invest positively and I'll see you in the next one. Peace.